American Battery Technologies, ticker symbol ABAT, is quietly positioning itself to become one of the most important battery recycling facilities suppliers in America. With government backing, massive growth, and a valuation that reflects potential, not just the current numbers, this could be a breakout story in the making similar to Tesla. Today, let's break down why ABAT might be one of the most overlooked battery plays on the market. ABAT, formerly American Battery Metals, is building a vertically integrated battery materials ecosystem. As we can see by the share price here, they're trading at $6 a share, and in the pre-market, I've been seeing a lot of action bringing it up, so I'll talk about that. Their model combines domestic lithium extraction, battery recycling, and refining, closing the loop from raw materials to usable inputs for EVs and energy storage, which has become very important in the market today. Unlike many early stage miners, ABAT has real operational facilities, not just slide decks. And their goal is clear: secure America's battery supply chain and dominate domestic recycling. So this is not just one speculative clean tech story. ABAT is strategically aligning itself with some of the biggest industrial shifts over the next few years we're seeing. So after the fiscal Q4 earnings, the stock jumped nearly 17% in a day, which was driven by the triple-digit revenue growth. And I reacted to this on stream, and it was absolutely insane the amount of growth they've had. ABAT posted 2.8 million in quarterly revenue, up over 18%. And full year revenue surged over 1,100%. They also secured a 144 million DOE grant for a second recycling facility and a 900 million loan from Export Bank to build out lithium mining operations, which is a vote of confidence from the federal government and other groups that believe in this company to do well. And it's very clear that it will, because of how involved it is in with the infrastructure and how this will be the future. We need to recycle these batteries somehow and reuse them, or else it will just be a huge mess we'll have. Not only this, but they were also added to the Russell 2000 index, which gives them exposure to major funds and institutional capital flows. So as we can see here, the momentum is building very quickly, and they're both operationally and financially stable, as the market is starting to notice this, and this could be a good next few years for this company. Not only this, but I also recently read, it's what got me to make this video, a recent Yahoo Finance piece titled "Assessing American Batteries Technology Valuation Gives Us a Window into Why Smart Money is Starting to Pay Attention," which is exactly why I think we could see this stock has taken off over the last few weeks, and why it will continue to take off. Because ABAT is currently trading around 7 times price to book ratio, but compared to the U.S. metals and miners industry of 2.4x. And this is not a premium multiple, and it's not a red flag. It's more so a reflection of the growth expectations that people see inside this company, and that premium is there for ABAT's assets, not for what we see they are today, but what they can become in a rapidly expanding trillion-dollar EV ecosystem. So this premium is something we saw early on with companies like Tesla, Albemarle, and more early movers in the energy spaces. So high multiples can precede massive growth stories. Not only this, but I want to bring up some of the main numbers you should pay attention to. The revenue growth up 1,000% is insane over a 1 year period, and it's one of the fastest among U.S. small caps. The government support. We got over $1 billion in funding, and major funding secured without heavy dilution to the shareholders like us, which is very important for our company. Not only this, but we've seen the operational scaling, as recycling facilities are already operational, and there's expansion underway very quickly, making this become better and better. Also, the index inclusion with the Russell 2000 is only the start, and it increases the passive fund buying, and it will just continue to drive the price up slowly but surely. Well, not only this, but we can bring in the cash costs, which are rising way slower than the revenue, which are early signs of operating leverage. So these are the kinds of numbers that attract institutional money once the story matters and once they can make money off it. But for now, I think this is a great time for retail to be getting positions in it, even starter positions, and just starting out here. The analysts are starting to take notice as well, and some are calling ABAT one of the most promising vertically integrated battery plays in North America. It is not many estimates given out by big banks or anything, because it's still not a big company. It's still a small cap. But the retail sentiments on platforms like StockTwits or Reddit, Yahoo Finance, wherever you want to look, it has been very great and bullish since the earnings, and the insider sales have also occurred. But the broader narrative is dominated by the growth and not fear. With this, the inclusion with the Russell 2000 has increased the liquidity and set the stage for large buyers to enter. And I think we're going to see that in the next couple months, next couple years, that this stock will probably multiply tenfold, basically, because it's still a very beginner market. So let's break down the current technical levels that I'm seeing on the chart. So Abbott is trading above key short-term moving averages, which is indicating the momentum is shifting. The 50-day SMA recently crossed over to 200-day SMA, which is a classic golden cross pattern. Here we can see it's trading at 628 pre-market as I'm recording this. And I think the next line of support is at that 7. If we could break through that, anything's really possible. But I do think that it will have to pull back sometime soon here, just because this run has been kind of unmaterialized based on not too much not too much support and not too much volume. But I do think if you're gonna start a position, there's no point in not rushing it. This is a company that will do great in the next couple of years, and you just gotta follow the news, follow the updates, and just be on your thing. So here I've also pointed out where I think the support lies. This is at the $5.20 range, which we've been seeing it kind of accumulate at for the last couple days, and I think that's a very strong wall. So if it does start to retrace, try looking for an entry at this $5.20 to $5.50 range, and I think you'll have a good entry on this stock. Also, here I was pointing out the golden cross pattern, which is one of the most bullish patterns you could see in stocks. But my honest view, let me break that down for you guys. Abbott is one of the most exciting small cap clean tech stories in the US market right now. It is very early and it's very volatile, of course, but between the federal support, the revenue growth, strategic positioning, and valuation premium that signals the belief by other customers in institutional ownership, this is the kind of asymmetric setup that long-term investors are going to be looking for. And if you're a long-term investor, I think this is a no-brainer. So here I'll point out some of the key catalysts to look over for the next 12 months. The continued revenue acceleration with improving margins, the finalization of the $900 million loan, and expansion of lithium extraction operations, construction progress on their second recycling facility, potential strategic partnerships with OEMs or battery manufacturers, and institutional accumulation following the Russell 2000 inclusion. So if Abbott executes even a fraction of what's on the table, the upside could be enormous. This isn't financial advice, but it's definitely a stock that I'll be watching closely going into 2026, and I think it has a lot of room to grow. So if you guys have any thoughts or comments, drop it down in the comments below. Make sure you guys like, subscribe, and peace out, guys. Thank you.